From the morning reading, investors fled U.S. mutual funds in August. Domestic funds suffered more than $60 billion in outflows over the past 3 months, amongst the most severe redemptions in 30 years. As a percentage of total assets, the damage wasn't as bad, but still ranks as extreme. Traders have left the primary healthcare ETF XLV at the fastest pace in history. The fund lost more than $1.3 billion in assets in the past week, the largest 5-day outflow in history. The fund has responded fairly well to extremes in flows, suggesting at least a modestly positive shorter-term bias for the fund in the weeks ahead. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:41 a.m. Central Time, and I'm recording this in preparation for the market day of October the 1st, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in to our morning report. And indeed, the overnight was pretty friendly across the board. All four of the U.S. broad market indices are up, with the S&P up a little over 0.5%, the Russell up about 0.2%, the Nasdaq up about 0.75%, and the Dow up a little over 0.5%. Crude oil up 2.4%, the euro down fractionally, bonds up fractionally, and gold down about 0.25%. In overseas action, in Asia, China up about 0.5%, Hong Kong up about 1.4%, Japan up almost 2%, Germany up fractionally, and the United Kingdom up nicely over 1%. In terms of macroeconomic reports for today, we've got quite a slate really, both internationally and in the United States. In the United States, you have the weekly unemployment claims. Of course, the big one is tomorrow with the monthly unemployment report. And let's see what else we got here for the U.S. We got ISM manufacturing after the market opens, and nat gas storage, and then FOMC member Williams speaking. And I think that should take care of it for today. Of course, tomorrow, the big unemployment report is a relatively light schedule, but a very important one. That monthly unemployment report is one of the biggest 4 of the month, so kind of keep that in mind. In terms of volatility, what we have is short-term VIX. It's been dropping a bit. Yesterday, obviously, was some bullish action. We're up on, or we're down on the short-term VIX to a 25.7. Skew, though, actually, I don't think that's the updated number. Let's really quick bounce over here. $113.9. So the skew is relatively benign, nothing to be concerned about there. IV percentile 42 for the S&P, 43, 46, and 50, relatively middle of the road. We did have standard deviation moves put in by the S&P and the Nasdaq yesterday. And those were bullish moves, so that was a relatively nice follow through. In fact, let's go back to the chart here. I want you to see something. So we talked about this being that potential return to the prior swing that we've been looking for several weeks, frankly. And you know, was this close enough? When we said yes, it was close enough. It was within 1 or 2% of the former bottom. So that was a kind of right now, right? It is a double bottom. We have a very nice reversal candle, and from that reversal candle, we have confirmation in a big way. So the question will now be, can this be the bottom and the bulls are now in charge and we will continue to march on? Now the problem is that we had so much technical damage getting down to this point that there's a wall of lines in the sand that the bulls are going to have to climb through. And the first order of business is, can they get above this right here? So about 1950, watch that area, 1950 on the SPX. We will have to get through 1950 to be able to achieve anything of significance, because if you don't get through 1950 and you have a lower high, then the expectation is that you would fall through this line next time and then go back to last October's low. So we need a higher high if this is at all about the bulls. And without that higher high, we would almost certainly raise those probabilities of going down, not just to here this time, but down to here in a very significant way. If we get through 1950, then we will then look for probably to get up here through this 2020 area, the prior swing high. And then, of course, back into the range at about 2040, the prior range where we spent so many weeks. So those are the first three things to kind of look for. Most important to focus on right now is, do we get bullish follow through that continues and then takes out this high? So that is super, super, super important. Russell relatively weaker. It did break those August lows, of course. Almost had a sneeze there, sorry. But we've had a reversal there as well, and it has confirmed that reversal. So, you know, is this simply a W pattern and with an undercut, which is very typical, and that undercut then becomes the bottom, and then off we go and have our reversal. So that's the theory in the short term for the moment until proved otherwise. But you see, you know, it's got a good ways to go to get back up here to the prior swing high, and otherwise it becomes a lower high again, and we expect that this pattern of lower highs and lower lows will continue, and the Russell would continue to fall down. So watching. NASDAQ, very much like the S&P, as is the Dow. So a lot of similarity in the indices right now. While there is some difference in relative strength, it isn't that big of a deal. They're basically all marching to the same kind of pattern. In terms of a regular daily report, while we are certainly have some hope for the bulls, we got to keep this all in perspective. The overall portfolio investor posture is decidedly bearish. We have market and correction from IBD. We have accumulation distribution. Slight improvement here, S&P to a D minus, NASDAQ and E as well as still. GMI index remains a 0 out of 6, and that author remains in cash. Primary market condition remains strong bear. Decision point scoreboards remain a sea of red down arrows, with the only exception being this one little green arrow on the PMO for the Dow. Intermediate term market posture remains very bearish even with yesterday's action. Portfolio position sizing opinion remains 0, and for the active traders based on volatility up to 50%. So very, very conservative there. Intermediate term market posture very bearish. Look at the S&P down below a 20, 18.1. Dow a little bit better, 36.4. And NASDAQ the best of all four at 41.1. Russell with the S&P at below a 20, and this one indeed very low at 13.2. Very, very bearish. Hedge warning status currently sits at level 3. This is the crash warning potential. This is an opinion that risk levels are present to where a significant down move is possible, though not necessarily predicted. But you have to take that in mind as you make your various opinions about your own trading. From the individual metrics, volatility, cross relationship, market and decline is still flagging though the short-term warning did come off. We also had the spike removed and the volatility ratio removed, so a number of things did flag off and improve. We have skew also came off. That's actually less than 135 now. New highs, new lows. Despite the fact that the S&P was up by a standard deviation move yesterday, we still have a warning on the new highs, new lows. There were only 111 new highs put in against 338 new lows. So that's something of a warning. And once again, we've been talking in recent weeks about breadth, and these advances have been increasingly on fewer and fewer stocks. And this is particularly true. You always got to watch the NASDAQ, where about 5 stocks represent a really disproportionate amount of the entire index. And if you get a handful of those 5 stocks that are doing well, it can look like you have a big up day when in fact the vast majority of the NASDAQ can be down. It would seem that yesterday that we had that big up 1 standard deviation move in the backs of a minority of stocks, and that the many of these stocks were actually putting in new lows. So very, very difficult situation there. Intermarket risk aversion indicators, all 5 still remain risk off, and given the market in correction from IBD status, all these special opinions are going to be very, very conservative, and indeed for novice traders it's really not acceptable to be initiating new positions until we get a follow-through day, and that will take some consistent bullish action to be able to show that. So we'll need at least 4 days to be able to get to that point. We've had one, and so far today looks to be an improvement, though you have to say that in the overnight we were up pretty sharply, and we're now only up by 5 points. So Globex high is significantly higher than where we are currently, and we've not even had our 7:30 report yet. So could end up giving back all of that overnight bullishness by the time we get to the open. In terms of sector specific, it's still a sea of red, though utilities certainly has been the first to show itself. And a couple of interesting things, obviously with the close of the month, took a look at some things there. And when you look at the third quarter, there was only utilities as a sector that was bullish. This quarter, and certainly the August and September timeframe, were most decidedly difficult. Now in terms of, and I measure this as 3-month returns, so that might be slightly off from the quarter, but XLU was up 3.79% and was the only sector that was positive for the third quarter. So very, very difficult. In fact, if you look across, whether it's style groups, industry groups, internationals, only India outperformed the S&P as an individual country ETF in the third quarter, with India, and get this, an outperformed, but it was down 4.16%. So very difficult for the emerging markets this last quarter, very difficult for S&P sectors. You had pretty much down across all asset classes and all kind of types within those asset classes. Yesterday, though, was a good day. I look at consumer discretionary up 2.66%, energy up 2.45%. You see a number of these up over 2%, and heck, the laggard was up at 1%. So that is the current situation. You see utilities 1 day, 5 day, 1 month, 3 month on this measure, was at 4%. So there's a somewhat of a consistency to the utilities. The only concern about utilities, of course, is that if interest rates do start to change, that one will be very much impacted as a result. Now, if your bet is that interest rates will not change in the intermediate term and that the Fed will not do anything anytime soon, utilities should continue to be a strong performer up until that point. So I think that's probably enough for today. As always, we greatly appreciate what you do and your feedback to us, so that certainly is important. Feedback can come to support@falconglobaltraders.com. If you like what you're hearing here, retweet us to your Twitter followers, to your StockTwit followers, to your Scutify. Like us on YouTube, subscribe to the YouTube channel. One other thing we're doing, of course, is we've been talking about this course that's available. We're working in collaboration with the Chicago Northwest Burb Trading Club. This is a 40-hour course titled Self-Directed Active Money Management. It's a 10-week class, 4 hours each session, plus some bonus material, 43 hours of education, all done by our friend Nick Fosco, who has taught this course 9 times. So has this well dialed in. I think you'll find it very productive. Its purpose is to cover topics of interest to self-directed investors and those seeking to trade for a living. Will be taking place on Saturday starting October the 10th, running from 9 to 1 each day in the Chicago suburb of Schaumburg. If you're not local, it can be simulcast to you, so you'll have access to everything. If you can't make every week, it'll also be recorded, so no worries on either front. For more details, to see the course description and the sign up, all those details, just go to this website and that will take care of you. Disclaimers as always, hit the pause button if you need more time to review. And we'll see you back here tomorrow morning before the market opens with the Falcon Global Market Preview. Good trading.